So Bitcoin keeps seeing this sort of sideways trend. It's bobbing up and down really anywhere between 57 to 63, 64K. And lately prices have been a little bit more positive. We've been seeing some upward momentum. But that being said, in the next 2-3 weeks or so, we could see one final leg down, one kind of last sell-off, one shakeout. But the caveat here is that that's probably the last major one before the bull run really kicks off, led, of course, by BTC. And you can cue all the usual people that are in panic mode right now, all the naysayers, all the Bitcoin antagonists talking about sub $40,000 BTC. But you don't have to pay them any attention. We're not worried about this. The fact is we're still very much in a bull market. Even if hypothetically Bitcoin were to go down to $47,000, $44,000, $40,000, even if, let's say, hypothetically, it were less than that, it's not going to matter in the grand scheme of things. Because as always, when in doubt, zoom out. This stock to flow chart here is something that's typically used for commodities, precious metals, that sort of thing. Plan B famously applied that to Bitcoin. We're very much right on track based on the 4-year cycles here that are defined effectively by the halving, the 4-year BTC halving cycle. Then you get the ebbs and flows in a rather predictable pattern as a result of that schedule. But you still have to brace yourself because that final leg down is a possibility. We're going to talk about it in this video, and I'll give you my personal opinions, recommendations on how to survive this one potentially final shakeout. Welcome to the channel. My name is Maddie, and this is Altcoin Buzz. As always, I wish you all the very best of luck if you choose to invest, genuinely. But whatever, I'm not a financial or investment advisor, so don't put too much stock in any one thing that I have to say. Get a diversity of opinions. That's usually a good idea. And also remember that this video, by extension, is not official financial or investment advice. So my first little recommendation here that I want to provide is don't get caught by this shakeout potentially before the bull run actually starts. Don't get shaken out now, in other words. It's a typical recurrence before the start of each bull run. A lot of paper hands do get shaken out. Don't be one of those. Don't have paper hands at this time when we're on the cusp of new all-time highs, not only for Bitcoin, but then subsequently for the rest of the altcoin market as well. Right now, it's very important to keep your composure. There's no reason to panic. Crypto has always been, will always continue to be volatile. It's important to relax, keep your composure. We're not entering a bear market just because we take a 10, 15, maybe even 20% dip. That is not a bear market confirmation. And maybe you'd say that, well, you could look at the technical analysis right now. Charts are showing lower highs and lower lows. But still, this is not a bearish signal in terms of our current state. Check out Randy on our sister channel, Altcoin Buzz Trading, for more up-to-date and more technical analysis, if that's your thing. If you're not particularly technically oriented, maybe you'd still point to the fact that, well, look, altcoins are suffering right now. Yeah, granted. But still, if we look at the overall market conditions, they're not too bad. Bitcoin is actually doing well, and typically after a good run for BTC, we do, of course, afterwards see an altcoin season. And one of the major reasons behind this is the upcoming Fed's liquidity injection and rate cuts. Many expect a rate cut by about 0.5 percentage point. On the other hand, BlackRock doesn't expect the rate cuts to be as high. That's fair, but either way, there's going to be volatility. That's the one constant that we can expect. The long-term forecast, however, is bullish at this point in the cycle. Now, let's consider some contingencies here. A rate cut would make borrowing cheaper. This would then inject liquidity into the market. Some of that liquidity will find its way into crypto, of course. Let alone if Jerome Powell turns to the money printer strategy again. This would hypothetically bring even more liquidity into the market. It wouldn't be a good thing for the broader economy, in my opinion, but there you go. In that case, also more liquidity will find its way into crypto if that were to happen. That would be the silver lining. And if you don't live in the United States, you may be wondering what that has to do with you. Well, that applies to me as well. I'm a Canadian. I don't live in the United States. I kind of live under their Western umbrella in a lot of senses, but I would argue that all of us do globally. The last time I checked, the U.S. economy still leads globally. So whether you kind of like it or not, whatever happens in the U.S. And its markets really does affect the rest of the world. And that includes Canada, That includes South America, Europe, Asia, pretty much every other part of the planet outside the United States. Okay, let's briefly consider some TA here, some technical analysis. I'm not the most technical guy, trader in the world, certainly, but a little bit of this is good for context here. And we're going to look at some key indicators for Bitcoin specifically. Now, I'd like to start with the 100 and the 200 EMA, weekly EMA. These can be a pretty good sign that generally show the end of the bear market. The 200-week EMA shows us that when they touched in 2015, 2019, and 2021, there was an upward trend. And then soon after, bull run started. Now, the current 100-week EMA sits at about $45,000, which means, in other words, it's very much on schedule for a big breakout. Various other TA indicators show strong support between the $43,000 and $49,000 range. So, for example, Fibonacci retracements, meaning that a dip like this is not going to be a prolonged drop. And even if that happens, that would kind of be worst case scenario outside of a black swan event. We'd get a lot of support in that range. It's more like a wick before it bounces back hard kind of thing. On the other hand, if Bitcoin touches the $50,000, $51,000 range, we may see this followed by a drop to $44,000. That's because it may cause a cascading liquidation event. Still, though, we're good for the long term. That's always the case. Keep that in mind. Good for the long term. And again, in the unlikely event that that drop to 44K would happen, still, don't panic. Don't get shaken out. Instead, you can look at that as a perfect buying opportunity because it's only going to be temporary. Remember, you always should be buying when there is blood running in the streets. It's not always easy to do, but in retrospect, you will thank yourself for taking those actions at those times because that's when you really make fortunes. So again, the message that I want to impart here is to stay calm and be patient. Do not follow early directional bets. Instead, wait and see what happens. And if you're here with a long-term investment, don't pay attention to short-term fluctuations. Just instead stay focused, stick to your strategy, and think about your long-term goal. Now, historically speaking, September has not traditionally been a great month for crypto. If we look at this chart here, it's mostly red with two notable green years. And the median and average work out to approximately negative 5% on the whole. If you average out the monthly returns for every September, for as long as we've had data with cryptocurrency. Okay, that being said, on the other hand, October, November, and December are much more crypto friendly. That's where we see plenty of green months with very actually high percentage numbers.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.
All right, so what is your strategy? You're going to need to have one, and a good one, to come out in one piece. I've expressed my opinion already that you ought to be staying calm, be patient, dollar cost average. If there is a downward price drop of some kind, that happens, right? That's cryptocurrency for you. Ultimately, you just have to be prepared for multiple contingencies. Try to take your emotion out of it. If we look at the market right now, we have kind of a neutral sentiment, so that could go either way. We could get into greedy territory. We could get into panicky territory. But I'll say it one more time, the last thing you want to do is to panic sell when things look ugly. Here's what you can do instead. Keep hold of projects with strong fundamentals. The fact that there's fear in the market does not change strong fundamentals. They remain strong and they're going to bounce back. So all the winners out there, obviously Bitcoin, Ethereum, Solana, but many of the smaller cap altcoins that we cover on a regular basis, if the market brings them down through no fault of their own, there's nothing fundamentally different about a project that's doing very, very well. So accumulate more is what I would do. I would also suggest you remove any leverage that you may have if you're into futures trading. Just my opinion, but this is not the right time to play around with leverage. Even small leverages like 4x. A 4x long on Bitcoin can get you liquidated if it hits $45,000. And that's possible, just my point of view. For altcoins, it's even more risky. So hold onto your spot and ride out any dips, no matter how deep they may be. They're wicks and they will recover. But again, stay away from leveraged future trading. Also, you can use dollar cost averaging right now, DCA. That's a great strategy. And it's one that fits where we are right now, fits the current circumstances. And if I were you, I'd focus on strong sectors like RWA, real world assets, AI, artificial intelligence, of course, gaming, maybe DeepIn if you prefer, and focus on strong layer ones. So Solana, Sui, maybe Caspa, and obviously take advantage of dips when you dollar cost average. Stop trading also in general, because any dollar that you lose now is a 10x, a 20x, or possibly even better once the bull run starts. So that's what I'd recommend. I'm not saying this shakeout is going to happen definitively, but we want to prepare for every circumstance, right? Let me know what you think about it, whether or not this shakeout is going to happen. I'd love to hear your thoughts. I'm almost presenting kind of in a way a worst case scenario. You plan for the worst, but you hope for the best sort of thing. If you're in a position to be shaken out, whether that's through leveraged positions that you still hold or whatnot, whatever your case may be, maybe take precautions now, make some adjustments if necessary. And if there are any other tips that you may want to share, certainly I didn't go through an exhaustive list, but let me know what they are in the comments below. And brace yourselves now. If things get ugly, again, it's only temporary. I really do believe that starting in just a few weeks from now, we're going to have a fantastic Q4.